Today we're going to talk about companies versus dimensions. In Business Central, if you have multiple legal entities, you can set those up as companies, and that's the standard way to do that. There's an alternate approach using dimensions, and we'll talk about that and show you what some of the pros and cons are. So let's dive right in. Alright, we're in Business Central now, and let's talk a little bit about companies versus dimensions. So companies are separate containers, I would call it, of information. So if I have a separate legal entity, I can create a new company, and all of the data within that company is unique to that company. So your customers, your vendors, your items, your sales orders, all of that information is completely separated into that company. So therefore you can print out all your financials for that company. And if you have additional legal entities, you can set those up as separate companies as well. So how do you access those companies? One can see all the companies that are in one's instance by clicking on the environment icon here, and you can see I have 3 different companies in my sandbox environment. I could simply switch companies by clicking on to any of the other companies. So that's what a company is. Now let's talk about dimensions. What are dimensions? So if I search for dimensions, I can see I have various kinds of dimensions. The most common use that I see is a department. You might want to capture expenses by departments. So for example, you can set up various departments in your company. So we have admin, production, and sales. And so if I'm going on a trip or something along those lines, I might want to code my expenses to one of the departments and then be able to do a departmental analysis of expenses. Another common way to use dimensions is for sales or revenue tracking. So for example, I might have different groups of customers. I might have retailers, I might have distributors, and so on. And I may want to look at revenue and cost of goods by different groups of customers. So a dimension allows you to capture that data all the way down to the financials, and so you could print out a gross profit P&L, for example, by groups of customers. You could do a departmental analysis, you could do a sales analysis by location, geographical area, or anything you can really think of. You can create a dimension. Dimensions are most useful when you assign them to a master card. For example, if you have a customer card, you can assign that customer to a customer group, and therefore whenever a sales order is entered, that customer group automatically defaults and you don't have to think about it. That's the best way to use dimensions. If you can have them automatically default so that the user doesn't have to select it, that's ideal. Another example might be product group. So if I'm selling different products and I want to be able to do a sales or profit analysis on different groups of products, a product group dimension would be perfect for that use. Back to company as a dimension. I could set up company as a dimension like so, and then within the dimension values I can set up all of my companies. So I've made up 3 companies here: Acme, Gen 1, and Stage 3. So we have 3 separate legal entities all set up as a dimension within Business Central. So what are the pros and cons of doing this approach versus a separate company, which is the traditional approach? Let's talk about that. Here we have a little table that will illustrate the differences between these 2 different approaches. So if I'm using a company, in this column here we're assuming we're using a separate company. In this column we're assuming we're using company as a dimension, and these are all the different pros and cons that we're going to run into here. Can I use the built-in consolidation features, including currency conversions, multiple tiered financials? For example, I can roll up 3 companies into a consolidated company, and I can take that consolidated company and roll that up with 3 other companies to a higher tier. So you can have multiple tiered structures when you're using the built-in consolidation features. Can you use the eliminations? Can you consolidate by percentages? Can you take advantage of all those features? The answer is only if you're using unique companies can you use this functionality. If you try to use company as a dimension, none of this functionality will be available to you. Data is separated by company. So when you're using a unique company, all of that data is contained within that company. For For example, my chart of accounts, my customers, my vendors, my items, my sales history, all of that is completely contained within that company. If I switch companies, I could have a completely different chart of accounts. I could have a completely different list of customers and vendors and items and so on. My history, of course, will be different. Everything is different. Now that can have its pros and cons, right? If you share the same products exactly between all companies, if you share the exact same customers, then that might be seen as kind of a duplicate effort to have to put each of the same information into each company. On the other hand, if each company is truly unique and they're in completely different product lines and you have different products, different customers, different vendors, then having all of that information in one company can be confusing, because if one user from one company goes and looks up the items, he's going to see items from potentially 5 different companies that are completely irrelevant to him. So in that case, using company as a dimension is a big drawback. Okay, here's another one. This one's going to be important to accountants. Balance sheet is guaranteed to balance by company. Well, if you're using unique companies, that's just going to happen. You're not going to be able to make your balance sheet go out of balance. You'd have to go to great measures to do that. That's going to be very difficult to do. However, if you're using company as a dimension, it's very easy to make the balance sheet go out of balance by company dimension. So one has to be very cautious about how one is entering transactions, how one is doing journal entries. Let's just give you an example of how I can make this go out of balance by company dimension. So I've returned back to Business Central and I'm going to go into general journals. So I'll just search for that, general journals. And here I've entered in a journal entry that will make my balance sheet go out of balance by company. And that's very simple. I hit one account with a company code for $100 and I hit a different account with a completely different company code for minus $100. If I post this, my balance sheet will not be in balance by company code dimension. One can do this practically in any type of journal. For example, cash receipts. I could take a payment. I could try to apply that payment to 2 invoices from 2 different companies. Now I have a problem. My subledger and my general ledger do not sync up by company dimension. One is going to take this approach. One must require the company dimension on all of the GL accounts. That will force the users to always select the company dimension. And you may need some development to make sure that users don't enter transactions that throw the company dimension out of balance. So that might take some additional work to make all that happen smoothly, ensure that we don't make balance sheet out of balance. All right, here's a common question. If I do some development and I extend the functionality of Business Central, does it affect one company? Does it affect all companies? If I have multiple companies in the same instance or the same database, that development by default will affect all companies. Additionally, if I set up a company as a dimension, I only have one company here. Of course, naturally, any custom development is going to affect all the company dimensions within that one company. So either way, it's any development applies to all companies. One can do company-specific development. For example, one could write code that says if company A, then do X. If company B, then do Z. Try to avoid that if you can. It complicates things and is not ideal. All right, the next point is all companies are accessible within one company. So if you're using unique companies, of course, each company is a separate entity and you have to switch companies as I showed earlier in Business Central. If you're using company as a dimension, well, you really only have one company and you're using dimensions to segregate your company. So all that information is going to be available in one company. You don't have to switch companies, which ties into the next one. User must switch between companies. Control O is just a shortcut to switch between companies. So that's just helpful if you want to quickly switch between companies, and that's applicable to this particular unique company choice here. If you're using company as a dimension, of course, you're always in one company anyway, so there's no need to switch. Data conversion required. So if you're going to implement a new company and add a new company to your instance, in both cases, you're going to need data conversion. You may need to import new customers, vendors, items, sales orders, orders, purchase orders, etc. So no difference in that regard. May print financials by company. So in both cases, you can print financial statements by company. If you're using company as a dimension, your current financial reports may need some restructuring. Can leverage existing setup. So if you go with using company as a dimension, all the setup's already done. So all you need to really do is add a dimension for the company and make sure that dimension is required for all accounts. And you, like I mentioned earlier, you might need some custom development to prevent users from throwing that balance sheet out of balance and doing things they shouldn't be doing. But other than that, your number series, your items, customers, vendors, all of that is as it is. So most of the setup is going to be already done for you. If you create a brand new company, that new company is typically going to be empty and you will have to do some setup to make it usable. Now you could copy a lot of the setup from your existing company and that would save you some time. So you can definitely leverage any setup that you've done in the past and put that into the new company that you're setting up. Okay, well I hope that answers questions between setting up a company as a separate company or setting up as a dimension. Now when would I recommend one way versus the other? In most cases, I'm going to recommend setting up unique companies for separate legal entities. It's the simplest approach and it requires let's say, it doesn't require extra development to get it to work well. If the companies are very different, then for sure I would recommend using unique companies. You wouldn't want to have a manufacturing company, a distribution company, and maybe a completely different financial service company. If those are all set up as one company using dimensions, I think that would get very confusing to the users. If the product line, if you have two legal entities and they happen to be selling the same product, or they're very, very similar and very parallel, then I think you could get away with company as a dimension. Where company as a dimension might work well is in a completely financial company, which is using general ledger and maybe AR and AP, but no inventory. I can see that working fairly well. If you've got multiple companies and all you're doing is general ledger and some basic AR and AP, and you're not doing inventory and all this other stuff, then I think the company as a dimension might work out well in that case. I hope this answers your questions. Of course, if you have other questions about companies, dimensions, or Business Central in general, feel free to reach out to us. Thank you very much.